Darwin Platform Group of Companies is one of the fastest growing diversified Indian conglomerates with global footprints. It is setting up offices globally and tying up with companies across the globe from multiple sectors. The company has ventured into real estate and construction, stockbroking and finance, arms and ammunition, mining, airlines and many other sectors.
Hello and welcome. You're watching Business Today Television. I'm Sakshi. Batra. With me is Shail, Bhatnagar, and this is Market Today, your favorite show as far as the closing trades is concerned. The last hour of trade and the markets have drifted to the day's low point as well. When we talk about the Nifty, it's just holding on to the 22,000 mark for now. 22,065, 130 points lower in trade, and about a 0.6% of a fall for this benchmark index. The Nifty Bank, meanwhile, is down 0.2%. 47,000 is still by its side. At this point in time, it's down about 80 odd points. Among the sectors, barring the Realty, the PSU banks and the metals, rest of the sectors have all drifted lower into the negative territory as of now. Even on the Nifty, when we talk about the stocks, 35 stocks of the 50 stocks are down in the red as of now. Shail, we did celebrate the all-time high levels, and now there is a kind of selling pressure on the top that we are looking at. Could this be just profit booking and we will again see, solid uptrend going forward? Or could this be, a point where the pain can set in?
Sakshi, firstly, good afternoon and a very warm welcome to all of you who are watching us. It is precisely for this reason that in the dying moments of yesterday's trade, I had suggested that we keep an option in mind, which was the 46,500 Bank Nifty put that was to expire on 29th of Feb. And you will see the wisdom of that trade today. Let me just recap the price for you. We had decided to show it at about 299, 300 rupees, I think, at that point of time. And it's now at 297, still there. But the beauty of that trade was that, we have now a week to see how this pans out. And this profit booking, let's hope for the wider passive portfolios doesn't last much. But any rally, Sakshi, which is for more than 5-6 days, always reverts back to the mean. Yes, we will see fresh record highs on the Nifty and the Bank Nifty. But for the moment, this was that very, very quick thinking on the foot that you've rallied for 6 days and everybody is very optimistic and the index has closed at its day's high and so on and so forth. But let's take a look at the Bank Nifty 29th Feb expiry put for 46,500, and the merit of that argument will now be visible maybe over the next 1 or 2 days. We'll put that out in front of you over a while, and the point I had also mentioned at that point of time was that the all-time high of this put, Sakshi, was 1,835 rupees. This is the Feb 21st put PCI. If you could just put it for Feb 29th, that would be wonderful. So that is how, ladies and gentlemen, at least options to be on the other hand. See the price, Sakshi. We had picked it up at, again I repeat, 46,500, ladies and gentlemen, in the PCR. I don't want to see a profit of 137 rupees per. Yes, that is the one. Keep this in the picture, and we'll see how this moves over the next 1-2 hours. This is what is basically a swing trade to the upper reaches. Let's see how it works. But overall, Sakshi, I think two things stand out today. One, that there is little or no volume. We've seen a fairly dramatic rise in prices, and now markets are digesting those gains. Therefore, you see not much of activity happening in the market. HDFC, of course, is the top traded counter, 2561 crores worth of transactions done. The counter is down about 1%. ABB was the company that had declared earnings, and remember, this was the first stock that we had marked in the morning. 49.47, 9% higher, fresh record high. about 1876 crores worth of transactions happening. Kabhi haan, kabhi na, you weren't there in the morning. Z, you know, one day they have news coming in.
Full on entertainment.
that the merger is on, the next day they denied. So yesterday it was up 10%, today it's down 12%. So wohi kahani hai. So 168 for you, 12% lower, 13% lower now, 1434 crores of volumes. So this is how it is, Sakshi, almost nearly flat trade. And let's see how the next 1 hour pans out.
Absolutely, Shail. The other movers from the F&O space include names like Piramal Enterprises, that's up 4.5% in trade. From the real estate space, that's one of the indices that's still holding on to 2% gains in this kind of a falling market. And you see stocks like Oberoi Realty, DLF sustaining some gains of about 3 or 4% each as far as the F&O space is concerned. The hotel space is a buzz, so Indian hotels companies are buzz in trade. Some of the metal counters, Tata Steel, Jindal Steel, they are the ones that are still holding on to gains at this point in time. And when we talk about the companies from the pharma space, it's Glenmark Pharma that's been continuously holding on to some gains. Even PSU banks, you have stocks like Canara Bank holding on to the momentum as of now. Let's welcome our guest at this point in time. We are now joined by Dhwani Patel, CMD founder of Finversity, now with us. Dhwani, very good afternoon. Good to have you with us. Tell us, what do you make of this dip that we are seeing in the markets? 145 points of a dip on the Nifty, led by largely stocks like HDFC Bank again today, and also on Nifty Bank. What is your strategy going to be on both of these?
To all the viewers over here. Talking about index right now, first of all, when we're talking about Nifty over here, we've definitely seen the fall coming in. Nevertheless, the price action was definitely suggested towards the all-time highs. We are going to face some profit booking coming in, and that's also a psychological reason that most of the times towards the all-time high, we do see some profit booking, some money being taken back home. But the fall that we've seen in last 1 hour does suggest that this is there to continue even in tomorrow's session. The next level that I'm eyeing over here is 21,980. Price action suggests that over there we can find some support. Once that is broken out, I would not be surprised if we are mean reverting on a 30-minute chart to a 200-period exponential moving average over here, which stands at 21,890. So I am definitely eyeing on these two numbers. I am bearish on the index for a short-term view over here. And on Bank Nifty as well, we did see it was outperforming over Nifty in the past few sessions, but then again today we are seeing that 47,300 is acting as a good resistance on Bank Nifty, and from those levels we are seeing some profit taking coming in. On Bank Nifty specifically, I'll be looking up at 46,900 now on the spot level. Once 46,900 is taken, I would be not surprised if on Bank Nifty we are seeing 46,730 levels as well.
Okay. Good to have you, Dhwani, with us, and good afternoon to you. Well, that's the mean reversion that's happening on the index, and this is one of the hard realities of investing, that whatever goes up sharply comes down, if not equally sharply, then at least to some extent, and those retracements are happening in the market. This is the written as well as unwritten law of markets. What else interests you in stocks on the long or the short side?
Shailendra, we've already been seeing that in the morning we were seeing good gains coming in on the cement pack side as well. JK Cement is one which is on the long side where I'm bullish on it. On the daily chart, if we see the primary trajectory of the stock is on the bullish side, we are seeing a higher high, higher low formation. What is interesting is that even in the past 3 to 4 months, we've seen the stock is taking a good support at a 20-period exponential moving average and giving a bounce from the same levels. In the past few sessions also, the same level has been acting out as a good support level. The intraday charts are also suggestive, with even a 140-point fall in the index over here. The stock is still holding up in green, so I'll go bullish on JK Cement from the current levels for a target of 4,400 to be played out. The stop loss that one needs to ideally maintain over here on the lower side is of 4145. I'm also going short on the IT pack over here, where Birla Soft is the stock I'm looking up at. Overall, the IT is seeing some profit booking coming in. Birla Soft recently, in just the last 30 minutes, has broken an important level of 800 over here, from where we'll see some more pain coming up in this stock. The next level that one needs to hold on for a short trade over here is of 770. Given 770 is broken out over here, 750 is also where we are seeing, as per the derivatives data, some put open interest being built up. So 770 and then 750 is the next target coming in over on Birla Soft. The stop loss that one needs to maintain over here is of 810.
Okay, these are the two stocks that Dhwani has in mind. So actually what we'll do is we'll just take a quick detour across the market. Remember, we started the morning on a very, very strong footing. The index, whether it's the Nifty or the Bank Nifty, had rallied for the 7th session in a row. Of course, now a decent amount of profit booking happening, at least on the Nifty. But the overall tone and tenor of the market is also slipped towards profit booking. We tracked 19 indices for you. 16 of them are in the red. The maximum losses are being inflicted on the media index. That's mainly because of Z, as also the Nifty IT index, where Dhwani is short on Birla Soft, to name a few stocks. In fact, the IT index is taking it on the chin, Sakshi. 1.6% lower, 1.75% lower, 666, and all 10 stocks are down in the index. So that's a bit of a pain that's coming in. The Nifty Energy Index is 1.5% lower, 39,374. And the top gaining index is, of course, the Realty Index and the PSU Banking Index, but they have shaved off substantially from intraday highs. The advanced decline ratio is firmly in the favor of bears today. 1562 stocks in the red compared with 700 in the green. Sakshi.
Absolutely. But let's focus on a few stocks that are still in the winning space. You talked about the realty space. I want to ask Dhwani if you can spot any technical, bets from this space. Oberoi Realty, we have DLF, Godrej Properties. These are the kind of stocks that are buzzing as far as the F&O space is concerned. Do you like these stocks or any other stock from this basket that you believe can give us promising returns from this space?
Absolutely, Sakshi. Over here, when we are talking about the realty space, DLF definitely has given good gains over here. We are seeing it also amongst the top 10 gainers over here in the FO section. But the conviction over here comes at Godrej Properties. Godrej Properties over here is taking, again, the setup is same as what we just discussed about JK Cement. 20 period exponential moving average. Again, a short-term moving average always suggests that more strength is there in this particular counter. We're taking a support there and we are moving higher from those levels. One can buy on Godrej Properties. The next target that comes over here, as per the derivative and the price action data, so we have multiple confirmations, is at 2500. So for a target of 2500, one can go long. And the stop loss that ideally needs to be maintained over here is at 2290.
Okay. Sakshi, there's a definitively strong bout of profit booking. In fact, much desired profit booking happening across the PSU pack. MRPL, just all of, yes, last week we were discussing 2020 up percent circuits. Today it's down 6%, a much needed correction from record highs. You have 255.80 on the screen. Again, you have IREDA 5% lower, and thank God for that, 166.30. Again, the likes of IFCI, GSFC, ITI, MSTC, all of them are down between 3.5%, 4%. And this was, of course, after a very sharp run up that we've seen in these counters all of January and in the early part of February. Let's look at defense. Again, Bharat Dynamics down about 2.9%. Garden Reach down about 2.5%. Massgaon Trading below 2100 down 2%. These are all counters experiencing a strong corrective streak. Let's look at high beta, which I so often cite. Okay, some names: GMR Infra 6% lower, 85. We've also marked HBL Power. This is down 3.5%. BHEL, erstwhile high beta low ticket, 223 for you, 3.5% lower. Policy Bazaar, BSE, Idea Forge, all of them slipping between 2.5%, 3%.
Absolutely, a much needed correction at that. But you know, the problem will start if we wipe out all the gains that we have seen for this last few days or so. I hope that does not happen, and this is just like a dip, and this can be again bought into as we have seen in the past.
We're sitting on Sakshi, you will not believe, 3.5 to 3.75 billion dollar inflows on a monthly basis. So if you convert that into, you know, this is coming in from SIPs that you and I and millions of investors are now very sensibly putting. It is coming from PPF, EPF money. It is coming from insurance inflows. So these are fixed.
Yeah.
So that's $3.5 billion. How much that is converting into crores?
So 18,000 crores of slips are coming in on a monthly basis.
Yeah.
That's the latest.
3.5 को 83 से multiply करते हैं ना, 8 24 5 28,000 crore. Right. Every single day, you get 1,500 crores worth of money ready. कि भाई आप नीचे गिरिए मैं आपको खरीदूं.
I know, and this could be that opportunity. Where else would you look for opportunity, Dhwani, in this kind of a dip? In case you were to get all that money, where exactly would you be putting that?
So I am particularly not eyeing on any sector specific right now. Stock specific action is very lucrative over here for me to put my money onto. Otherwise, we are also seeing some buying coming in over here on the gas side, where Gujarat Gas, IGL, MGL, these are the counters where we are seeing buying action coming in. Gujarat Gas again looks very good at the current entry level. So I'm definitely eyeing on this one for a price target on the short term basis of 600. Once 600 is taken out on this counter over here, we'll see 620 to 630 of an up move also coming in. So positionally, this is a buy for let's say about a month or two, and the stop loss that one can put on the lower side over here is of 544. So risk reward also in this particular counter fits in, and we can see some good gains coming in on these counters as well.
Okay, gas stocks right there that you can focus on, which is continuously holding up in this kind of a falling market, about 2% higher for Gujarat Gas even now. But would you also be putting in fresh money in the OMCs, which have had a massive re-rating in the past? So stocks like BPCL, IOC, HPCL, would these dips also give us an opportunity to buy?
So technically, when we are looking up at these chart structures, I would say that the highs that we formed around the first week of February over here, we have not surpassed those highs. So momentum is missing over here. So we are taking some breather over here in these counters. So for me, right now, the OMCs are on a wait and watch. So once we breach these highs, fresh momentum longs can be built over here.
Okay. It's the entire market that's slipping into profit booking zone. Let me just mark some good prices for you, because for the last 27 odd minutes, 17 odd minutes, we are talking only about prices that are slipping. Sakshi, let's look at new highs. Okay, it gives me great pleasure to look at this data, at a time when the market is correcting. Okay, ABB we've discussed many times in the morning, 9.5% higher. You have 49 in front of you. Let's see a change in digit. Yes, it did happen in the morning. The high was 5134. Okay, our most recent favorite to the list that we've added is SBI. Okay, 770, 1.3% higher. The intraday high was 7775. Okay, Sundaram Finance, 4157, 1% higher. Hotel stocks, इनको देख के ही खुशी होती है, अब they become unaffordable, 553. All through COVID, Sakshi, I stayed in a particular property in Bombay because the locality that I used to stay in was, what was it called? Sealed by BMC.
Okay.
Right. And I paid a princely sum of 2,800 rupees per day for a 5-star room. Breakfast free. अब वो समय कभी नहीं आने का.
Oh yes, oh yes. Now that the entire coastal road has been made,
Yes.
and some more highways are being made, it's getting even more affordable. to be in Mumbai at this point in time. But of course, real estate stocks we've discussed, and some of those which are Delhi based, like DLF, they are shining through. Godrej Properties doing very well. The way it has sprung is also something to take note of as well. But PSU banks, they continue to be positive even today. The Nifty PSU banking index is half odd percent higher in trade. There is no let up in this kind of a rally that we've seen here. Dhwani, Union Bank 2.5% higher, Punjab and Sindh Bank 0.7% up, BOB, Indian Bank, Canara Bank, all in the buzzing space as well. Any particular top PSU bank that you would continue to buy in this kind of a market?
Definitely, Sakshi, over here, when we are looking up at the price action data over here, so Canara Bank and over here, even Bank of Baroda, so BOB, both are looking good chartically to me over here. The conviction more rises over here in BOB, where we are also seeing volumes being picking up. And also what I'm seeing over here is that on the derivative side, the open interest built up is also seen in BOB from the current level. So BOB is one where I would want to put my bet on. The stop loss that one needs to maintain on the lower side is of 268 for a long side target of 285 to 290.
Okay, so that's the PSU banking view that's coming in from Dhwani for you. Let's look at what else is moving. There are now just about 8 stocks that are up into the green as far as the Nifty is concerned. Rest of them have all slipped lower. So ICICI Bank, that's holding up 0.7%. You have IndusInd Bank, that's holding up 0.3% higher. You have State Bank of India 1.3% up right now. Then you have the auto counters. Maruti Suzuki 11,468, 0.2% higher. Eicher Motors is up in trade as well. These are the 2 stocks that are moving from the auto basket. From the metal space is Tata Steel and JSW Steel, that's holding up. Tata Consumer Products, remember this is one stock that most of the experts are now getting positive on from the FMCG space. That's coming back as well in focus right now. Now from the FMCG space, Dhwani, do you see on technicals at least some of the charts improving, if not the entire sector already?
Yes, absolutely. Sakshi, over here, Marico is where I have my eye on. The overall chart structure suggests that we've already formed 2 bottoms over here. We are seeing a positive move coming in on this particular counter. So Marico is where I would be going long on. 550 on a short-term basis is an easily achievable target, post which we can look at 555 to 560 range also being achieved over here. The stock is also trading above its all important DMAs on a daily chart. Volumes are picking up in today's session. Stop loss that one needs to maintain over here is of 533. So it's a very small stop loss of about 6 rupees for a target on the higher side of 15 to 16 rupees plus.
Okay. Sakshi, let me just add another round of enthusiasm in the market and let you know stocks that are on the upper circuit.
Oh, okay. Okay.
That's because, there's little to talk about and things are getting, how should I say, bloodier and bloodier on Dalal Street. But let's look at spaces where buyers are still extremely over enthusiastic. Paytm.
Okay.
5% higher, 395.05. The stock's been there for a while since morning. Actually, it's been there for a while for the last 3 days. And I distinctly remember checking early morning volumes. They were about 8 lakh shares. Now 9.64 lakh shares have been traded. Okay. KPI Green, this is a post bonus split that's there in front of you, 1637, 5% higher. And in the morning, we had discussed Tourism Finance Corporation of India. This is running after a very large block deal, 5% higher at 231, Sakshi. There are many other names, but these are the ones that at least make news-based sense, as well as those that are there in the volume space over a period of time. So these are the stocks that are looking good. And would you want to see some new 52-week high names?
Absolutely.
Okay. CAMS 2969. This is a good stock to look at. 3.78% higher. This is of course one of those cornerstone stocks in the financialization of assets theme that is doing pretty well. The price that you see is baked with heavy volumes. About 6,97,000 shares have been traded in CAMS today. Sakshi.
Absolutely. So that's, we were talking about the monthly flows that are coming in,
yes.
And CAMS definitely participates in that. A lot of people via mutual funds, they invest via CAMS. That's the site for them to go to check all their portfolio stock, funds as well, and to see the performances. So that's as far as CAMS is concerned. And Marico, what Dhwani mentioned is interesting, because just yesterday Akshay also bet big on Marico. He was the first one to actually spot that breakout coming in on Marico yesterday. So you have a second vote of confidence in 2 days coming in on Marico on FMCG stock as well. Let's look at some other stocks then. Metals pack, Dhwani, tell us, where exactly would you throw your weight behind? Would it be Tata Steel? Would it be private, PSU names like Nalco? Where exactly would you be focused on? Because the metals pack is also showing some, uptake from last few trading sessions or weeks, if I may say so.
Absolutely, Sakshi. We've seen the metal pack being picked up. Today also in the morning, we had metal as one of the top gaining indices also over here. But overall, the conviction over here for today's session on either of the counters in the metal pack is not there, because we've failed to cross the previous swing highs over here. And technically, when you cross the previous swing highs is when we see a breakout coming in. So as of now, metal pack overall, after the slip that we've seen in the second half of the day, is not coming in. So I would like to avoid the metal space right now.
You will want to avoid the metal space right now. Okay. Let's look at some other space if we can find any thing of interest for you then. Dhwani, what about the pharma space? Would you have any names that come to your top of your mind at this point in time? We've again been seeing some buzz as far as the diagnostic names and the main pharma names are concerned.
Yes, absolutely. Pharma names have been doing well since the morning, and is even Sun Pharma over here is looking good to me. But then again, on Sun Pharma, I have a caveat buying opinion over here, where a suggestive level of buy above 1560 in this particular counter is there. 1560 is where we'll see the breakout coming in on Sun Pharma again. Stop loss of over here 151510 has to be maintained, and on the higher side, once we cross 1560, we can expect more buying in coming in. 1600 to 1625 is the next target as per the Fibonacci levels is what we are looking at.
Okay, so that's the number coming in on Sun Pharma. The Nifty at the moment is down about 0.8% in the vicinity of a 120 point cut on the index, 190 point cut on the index. Now 22,000 seems to be at risk. We are almost at 3 p.m. in the market. Thank you, ma'am, for your wonderful advice, and we hope that you'll be joining us soon again. What a pleasure to listen to your views. With that, ladies and gentlemen, we'll take a very quick break, and on the other that break is waiting Mr. G. Chokalingam with his wonderful views in the market, and that a very keen eye to keep out of momentum stocks. Stay tuned.
Darwin Platform Group of Companies is one of the fastest growing diversified Indian conglomerates with global footprints. It is setting up offices globally and tying up with companies across the globe from multiple sectors. The company has ventured into real estate and construction, stockbroking and finance, arms and ammunition, mining, airlines, and many other sectors.
Welcome back. You're watching Market Today on Business Today Television. I'm Sakshi Batra. With me is Shail Bhatnagar. And now we also have another special guest joining us on this edition. We have with us Mr. G. Chokalingam joining right in. And of course, he's very famous for, like Shail always points out, that it's very difficult for us to really take out some specific stock ideas from Mr. G. Chokalingam. He's very selective in his views as well. But we always appreciate in the last few days after you had joined us previous time, Mr. Chokalingam, good afternoon to you. We've at least mentioned 4 times the stocks that you had mentioned with us, especially stocks like Craftsman Automation has been mentioned time and again by us. There was another stock that you were constantly mentioning, Nesco, that we have appreciated your views from last time, and we hope that you are able to give us such good ideas even today for all our viewers. Mr. G. Chokalingam, founder and MD, Economics Research, now with us.
Mr. Chokalingam, good afternoon. Shail this side.
Yeah, thank you. Thank you. Good afternoon, and thank you very much for your kind words. Yeah.
We often remember you when you are not there on the screen as well.
Thank you very much. Thank you very much for your kind words.
And there is a very valid reason to the kind of, how should I say, wisdom that Mr. Chokalingam brings to the show. For a man who's traversed 3 decades in the market, he has a very, very keen eye on where lies value and where momentum should be avoided. Sakshi, my first introduction to Mr. Chokalingam was when he was an analyst in Inam Securities. This was in 1999-2000, and he used to research a company called Moser Bear, which was based out of Delhi. And we used to speak to each other on every quarterly earnings. And well, that company is no longer there, but our friendship has continued, and I have learnt a lot from Mr. Chokalingam.
Wonderful. Wonderful. Mr. Chokalingam, where exactly are you keeping your focus now that we are seeing some dips on the markets? What is the trade setup really looking like to you right now?
Yeah, since you talked about my conservatism, I want to tell you only one thing that, a lot of investors are focused on the valuation momentum, but what is equally important in a small and mid-cap space is the availability of liquidity. So invariably what happens, the smart entrepreneurship based HNIs, they understand the business, they understand the valuation, they are the first one to generally book profits on small and mid cap. Then finally the retail investors, new investors, they line up to book profit, but then they miss the opportunity. So I have seen this cycle of missing the opportunity and losing heavily for the last 33 years. So therefore, I had a discussion with your colleague on the same. Yes, last 5 years, people are saying that the value investment is no longer relevant. To some extent, yes, that was proven while market was on uptick, momentum was at peak, when the new investors are coming like a tsunami into the market across the world. But however, when market falls, what is important is the valuation, because that is what gives comfort to majority of the investors, then they hold on to the stock. So that is why the kind of stocks I have recommended in the last 1 month, they all belong to the category of where there is a lot of hidden value. Even stock like Nesco, if it falls 20-30%, I will not cry. I would consider it as a great opportunity, because wealth creation, multi-baggers, they are made by purchasing in such a bear market or correction mode rather than market like this. The another point I just want to tell you, if you can permit me for 1 or 2 minutes, basically why I got more fear, there are a lot of names like Breadcom, EKI, they zoomed like anything, but when you decode the revenue and sales, it's more of purchases and sale of, traded goods and services. That is one type. Second type, the name changes coming to market, aligning the name to the current market theme. Third, there are a lot of, service companies enjoying PE of 70, 80, and a lot of entrepreneurs who have seen their market cap around 200, 300 crore, suddenly they are seeing 2,000 crore, 5,000 crore, 10,000 crore. So there will be a definitely temptation, not only for the investors, even for the, the entrepreneurs to utilize this kind of opportunity. That is why I was very cautious. And even now, it is too early to say that we have corrected. I think it is just, tip of the iceberg. I think there will be severe correction, but I am bullish on the market. Overall market, I am very confident. This will double in the next 4 or 5 years post election. But before that, the overvalued small and mid cap should fall quite badly.
Okay.
Oh, okay.
Mr. Chokalingam, I wish I could agree with you publicly on this very, bearish statement that you're making. But nevertheless, we will keep it at the back of our mind. And like we fondly remember you when you're not on the show, we will also remember you when this correction deepens. But thank you for the thought that in 4 years you see the Nifty doubling. That itself is such a heartening thought to have. So if you divide 72 by 4, that's 1 plus 3, 18% CAGR is what Mr. Chokalingam is thinking. I'm sure you know.
Small correction. I
Yes.
said, in terms of market cap, we are very close to $5 trillion. In 5 years, it will double to $10 trillion.
Yes.
But the Nifty may not double, Nifty and Sensex, because 5-10% will be the new IPOs. And then the rally would once again, I'm telling you, would be led by small and mid cap in the next 5 years. So the broader market will rally much ahead of Sensex and Nifty.
Yeah.
And therefore, the Sensex and Nifty may give only 12 to 15% CAGR, but the whole market cap, as you rightly put it, it should grow at 18% CAGR for next 5 years.
Okay. The Nifty CAGR you pegged at 15, is it?
12 to 15.
12 to 15.
Because there is a structural change, all of us know,
Yes.
very simple common sense. Last 3-4 years, every week 5 to 6 lakh investors were coming. Last couple of months, every week 12 lakh new investors are coming. Today, the investor base has crossed 16 crore. So let me tell you, out of the 16 crore, the 10 crore people who have come into the market in the last 5-6 years, most of them are young fellows. And they don't have passion to buy a stock like HDFC or Maruti and wait for 5 years to double. They want to double it, if not in the same day, at least in a month or quarter. So therefore, the lot of these new investors would focus once again after a possible correction on small and mid cap. That would again take up the market cap from $5 trillion to $10 trillion by the time the current government finishes the third term in 2029.
Okay. So what I'll do, Mr. Chokalingam, is since I am more bullish than you, what I'll do is I'll take 15% CAGR on Nifty instead of 12. Is that okay with you?
Yeah. I mean, but we can go wrong miserably also, because that is the beauty of the market. Let us also remember the fact that 2010 November to 2013 November, the Sensex was down absolutely, if my memory is right, around 25%. So these things also happen in the market if something else goes wrong.
Okay. Now we are having these broad discussions in the market with Mr. Chokalingam because there is absolutely nothing to report that's happening on equities, and everybody in the market is waiting for 332 strike so that they can go home and maybe party ahead of Friday. Mr. Chokalingam, so 15% CAGR will see the Nifty doubling in 4 years 8 months, which is 48 plus 8. 56 months. Okay.
Yeah.
Okay. Now tell me, you were at that Chennai event that happened recently, TIA.
Yes. Yeah.
Which stock did you present, sir?
Vidya Telelink. Personally, I do not own, but we have officially recommended also. It's a fabulous stock, belongs to one of the Birla groups. There are 2 pockets to this in terms of valuation. One is the holding of shares in Birla Corp cement company.
Yeah.
That is more than 4,200 crore. That is around 110% of the market cap of India Telelink. The other part is the core business. This is unique holding company. There are lots of holding company. They remain as a pure holding company. There are few holding companies, they have a core standalone business, but they are not profitable. But in my knowledge, this is one of the very few companies, it has a rich holding in cement business, and also the core business is doing fabulously well. It was traditionally a cable company, telecom cable, but it moved to EPC projects in the telecom, then off late EPC projects in the water as well, and it has got more than 4,000 crore order. UP. So this is a stock I believe, is a good buy even in this market.
Okay. Mr. Chokalingam, please allow me to show the stock on air. Yes, this is the one that Mr. Chokalingam is referring to, Vindhya Telelinks. And if you see in recent memory and even today, the holding companies are really shooting through the roof. Today's top gainer in NSE 500 is Tata Investment. Last time I saw it was up 9%. So yes, you were talking about Vindhya Telelinks. It has 4,200 crores worth of shares of Birla Corporation, and of course its own business is doing pretty well. That's the argument, sir, of investment.
And the EPC business, if you see, the share of that business in the total profit has gone up almost 80-90% of the total profits. In the last 10 years, it's a phenomenal growth. Even in the first 9 months of the current fiscal, the EPC segment has posted a fabulous growth in both revenue and profits, almost 80-90% year-on-year basis. So therefore, what I'm saying that the current market is valuing only one of these two, either the core business or the holding investments. Both are not valued by the market, and the day should come because there are two triggers for the theme to play out. One, we all know the kind of digitalization happening in the country. So that would demand for more and more project services from companies like Vindhya Tele. And second, we are seeing the consolidation in the cement industry. The other going aggressive also can enable Ultratech to acquire more cement companies, because without Adani Group in cement, Ultratech is the power of CCI. So that is also possible for further consolidation. I am not forecasting. I never say outright forecast of X company being taken over by Y. But what I am saying that the consolidation can further aggravate, and that should be possible for a holding company like Vindhya Tele, which has got sizable investments in cement business.
Okay. Now, since the markets are flat, let's discuss this stock in detail. Vindhya Telelinks, ladies and gentlemen, has a market capitalization of 3,000 crore rupees. And let me just share the financials with you. Okay, just a moment, please. This will take a while because not many times do we. Okay. Interesting. Trailing 12-month revenues of Vindhya Telelinks, ladies and gentlemen, are 4,171 crore rupees. Let's look at the profit after tax. It is for the trailing 12 months about 145 crore rupees. So sales to market cap, this looks relatively cheap because the ratio is less than 1. And let's now shift to Birla Corporation, whose shareholding pattern shows Vindhya Telelinks owning about 8.2% equity of Birla Corp. Birla Corp's market capitalization is 13,000 crores. So 8% of that would be somewhere like 1,300-1,200 crore rupiya to hai. Okay, so that's the hidden value that Vindhya Telelinks has. Am I right?
There is one fact. The Birla Corp has got two 100% wholly owned investment companies. They also own sizable Birla Corp. So they are 100% subsidiary of Vindhya Tele. So therefore, Vindhya Tele holds actually 2.44 crore number of shares of Birla Corp. Okay. Apart from that, it also holds shares of Universal Cable and Birla Cable. So total value actually comes to about 4,697 crore. That was few days back. So. And Vindhya Tele also has got a very small debt. So most of its working capital, which the infra business is highly working capital intensive. This company needs 2/3 of the working capital needs through their own net worth. The net debt is quite small. And third, I have valued this company at to be very conservative, 12 times the core infra business. But you and I know most of the infra stocks in the market, they are trading at a 30 to even 50 PE on a trailing basis. So if you give 20-30 PE for infra business on a trailing basis, disregarding the order they have got and the growth prospect they have, and even if you have a 50% discount to Birla Corp investments, I think the stock can easily give you 30, 40, 50% return.
Wow. So from here also, a 40-50% kind of a return is
Yes.
what you can really expect on this one. 25.97, for some it may look expensive at this
Yes.
level, but even then, the kind of value creation that it can look forward to, you have
Let's
to
look at
look
the PE for this one.
Yes.
To be fair, I just wanted to add one more point. Since I am negative on the whole small cap pack, in case small cap index falls 5-10%, so even India Tele can fall, 10 to 15%. So one has to keep this possible risk in mind, the market risk. I do not see any risk from the stock.
Okay.
Okay. Vindhya Telelinks, Sakshi, over the last 10 years, CAGR is 32%, which means each year it has appreciated 32%
Yeah.
since 2014, handsomely beating the small cap index and of course the telecom sector index. I just want to see one other particular thing. Okay. 5-year PE is fairly close to its median PE, 11 and 9.
Okay.
And what about price to book? Price to book is at the moment, oh, it's below book. It's trading below book.
Yeah.
Oh.
Not only that, you can see the EPC segment results year-on-year basis. It's a phenomenal for 9 months.
Oh, okay. Mr. Chokulingam, like I have always said, we are blessed to have you when you talk about such deep value stocks with such authority. Let's see how it goes. But thank you so much for such wonderful insights. What else looks attractive to you apart from Vindhya Telelinks? I was going through your presentation in TIA. Sadly, I wasn't there, but I wish I could have met you there. But nonetheless, we'll catch up in Bombay. But apart from Vindhya Telelinks, what else looks good?
No, I have a couple of stocks, but I personally purchased them. So
Okay.
they are also equally great like Nesco. Nesco also I own, but I bought more than 30 days ago. Believe me, I believe among all my coverage stocks, I may be wrong, all my coverage stocks at present, I have the highest conviction on Nesco. And in fact, I have officially released a report saying that it is a next generation stock. And
Wow.
it is followed by Indoco, but there is no match for Nesco. But I have a couple of stocks like Nesco, but I cannot talk now. Maybe after a couple of only I can talk because I personally purchased them. And apart from that, then there is a lot of constraints for me to talk. So maybe if you give me a few weeks time.
Sure.
Yeah, and I don't mind for the benefit of your investors. Today only we initiated Andhra Sugar. This is another stock I have been monitoring for last 4 decades from 1990. It's a phenomenal stock. In the last 2 years, the stock did 77%. And it's extremely rich in investments. It has got investments in Andhra Petro, Josil. Josil is the company which supplies to FMCG players. Then it has got a huge land bank in a place called Tanuku. It's a taluk headquarters in Andhra. There was a sugar plant set up 50 years back in the heart of the town, and that plant is now shut down. So they are sitting on a huge land bank. Apart from that, it is the most efficient caustic soda producers, nearly 2 lakh ton of capacity. And then they have got a variety of industrial chemical capacities. So if you put a replacement value for all the businesses, it should be plus the land value and investment value, and also it's a net cash company. In my sense, it could be even 3 times its current market cap. And I have recommended this stock repeatedly in the last 20 years, and it has done phenomenally well. And I picked up only last night this stock formally for recommendation because the stock has corrected nearly 40% in the last 2 years. And I believe the caustic soda industry will come back because there are not many new capacities. And this company has got a captive power plant, 33 megawatt of coal-based power plant, and it has got a 16 megawatt of wind power, 200 megawatt of solar. So all this captive power reduces the caustic soda. That is why in December quarter, some of the caustic soda players posted losses, but this company still posted profit. So when the turnaround happens, I'm pretty confident, this will go back to 13, 15 EPS, and it always enjoyed a 15 PE minimum in a good time. So it's a good stock for the next 1 to 2 years.
Okay, so there you have it. Deep value stocks being talked about on the show by Mr. Chokalingam. Andhra Sugar, next 1 or 2 years, it can give you a substantial upside in case you're a long-term investor at this point in time for the diverse business that the company has seen. And Mr. Chokalingam says from last 2 decades he's been looking at this stock and he's been advocating for this stock. And this time it's corrected 40% and therefore it calls for a good buy at this point in time. We will keep an eye out on this one as well, Mr. Chokalingam. The other space that's picking up pace is the FMCG space. We were talking about Realty, PSU banks, metals all the way before you had joined in, but the FMCG basket is showing some ticks. Of course, this has been a large underperformer, and Tata Consumer Products, 0.5% gains, Britannia, Nestle, Marico was discussed by Dhwani just before you had joined, sir. Do you find value in the FMCG space as well right now?
I believe one can look at Britannia. We had closed it, but then it has corrected after we closed the call. I think Britannia could be one of the safest stocks. And second, we have a buy rating on ITC. Okay. I don't think the parent company can offload stake in the near future. It doesn't make any sense for them to immediately unlock because the company has already demerged the hotel business and it can demerge even IT services business and also paper packaging business. So it makes a lot of sense for the cigarette company to demerge some of these verticals and then think of divesting the stake by parent. So that's going to take more than 6 months or 1 year in my view. So this correction in ITC is another good opportunity, I firmly believe. So these are the two stocks in FMCG I would recommend.
Okay, Sakshi, let's just look at Andhra Sugar a little more deeply. The reason why we mentioned this is that frankly nothing's happening in the market. I don't want to keep on unnecessarily reading falling prices. So Andhra Sugar, ladies and gentlemen, has a market capitalization of somewhere in the vicinity of 1,558 crore rupees. And when you look at the trailing 12 months, it's done about 2,000 crores in terms of operating revenue. And when you look at profit after tax, about 75 crores. The good part to notice, especially in Karnataka and Maharashtra, is that the sugar crushing is less and sugar production is also slipping, which essentially means that sugar prices will go up and realizations will also go up, which is good for stock prices, if not for people who consume sugar. Mr. Chokalingam, would that be one of the theses that you have to get back into Andhra Sugar?
No, very interestingly, the name is misnomer. It primarily started as a sugar company. It had a 3 sugar plant and 2 plants were shut down. That shutting down is another reason for me to recommend because, as I said earlier, the plant at Tanuku, which is shut down, has got a huge land bank. Now, only 1 sugar plant is operational. And the reason for recommending this stock is that now sugar is only 10% of the total revenue, roughly. The 80-90% of the revenue comes from the chemical business. And within chemical, they have 2 set of chemical. One is chloralkali and its derivatives. And then they have got industrial chemicals. And, I am expecting the chemical business to turn around in the next 6 months to 12 months. And whenever it shows some sign of turnaround, the stock flares up much before the results are out. Now, this company is also more than 5 decades old. Very interestingly, in the last 30 years, despite operating in a highly cyclical businesses like sugar and caustic soda, it never skipped the dividend. And it is also one of the few commodity companies to be net cash company. And also it has got a subsidiary Josil, which supplies inputs to FMCG names. I mean, you can go to Josil website and see the names of those customers are fabulous. So it is a play on chemicals and it's a play on management quality and it's also a tactical call. There are around 45-50 promoters holding some 45% stake in the company. Only 2-3 people have a 2 or 3% stake in the company. The rest of them all have less than 1% stake, highly skewed. While promoters have some 45%, only 1.8% of the total number of shareholders control 85%. So I leave, my imagination, your imagination, let it free. Beyond that, I can't forecast. So this is another tactical opportunity, I believe. As I said, the replacement value, the value of investment cash should be more than 2 times, or it could be even 3 times the current market cap. So these are the reasons for initiating buy recommendation on Andhra Sugar.
Okay, so that, ladies and gentlemen, brings us to the complete point of the investment thesis in Andhra Sugars as well as Vidya Telelinks. Remember, Mr. Chokalingam is that diver who goes deep into the ocean to pick up pearls and oysters for you. When value will be released, only time will tell. But remember, the overall theme in the market these days is exploitation of value, not growth. So this is the reason behind the very sharp rally that we've seen in PSUs, and of course these wonderful under-researched, under-owned stocks which quietly double under the radar. Thank you, Mr. Chokalingam. What a pleasure to have you, sir.
Thank you. Thank you.
Okay, let's get back to the markets, Sakshi,
Yes.
and we'll pay attention to what the Nifty has been doing so far, down about 159 for you. 22,000 seems to be retained by bulls today, and that's good. And with this, the 7-day rally in the market now halts,
Yeah.
and that's good. Sakshi, Tanya mentioned in the morning that the market were to turn sideways and consolidate at current levels. Remember, tomorrow is the weekly expiry of the Nifty. It should not show any fireworks because you've already seen a 700-point rally. It should consolidate at current levels. Nothing much is also coming out of US markets. They're also flat out after very decent record highs. So it will be the time of option sellers to sort of make money from the market. Sakshi.
Meanwhile, stocks like SBI, they continue to move at fresh record highs. At 771 odd levels that we can see. 1.4% uptick. It's now the top mover on the Nifty, and it is at a fresh high at this point in time. We've been harping about how SBI is now taking the lead as far as the PSU banking story is concerned, and that continues to move higher, even on a day which was slightly on a consolidative note as well. Let's now start to wind down the market for you. We're just about 3 minutes away from the day's close. At this point in time, Realty, PSU banks and metals is where the action remained in the last half an hour of trade, last 1 hour of trade. Realty stocks, especially the mid-cap realty names like Sobha Limited and all, they have rallied in trade today. So somewhere to the tune of 7% is the kind of move that we've seen on some of these stocks. PSU banks, of course, like I mentioned, has been led by stocks like SBI today. Canara Bank also moving in tow, and some of the other banks like Punjab Sind Bank, Indian Bank also moving up. Metals, of course, did see some surge on the back of Tata Steel, JSW Steel, Jindal Stainless Steel as well. Those are the kind of stocks that moved up from the metal pack as well. In the F&O space, ABB India clearly remained the stock of the day after a stellar set of numbers and the highest ever income or the top line that was reported in the quarterly earnings by ABB. 10% higher for this one. It ends at the day's high point, 49.85 currently, followed by names like Piramal Enterprises. That's also up, about 3.5–4% each. DLF, Oberoi Realty, from the other realty pack main names that were up and about. You had Siemens that was up 2% as well. And apart from this, Indian hotels that was also buzzing in the F&O space as well, Shail.
Okay. So Sakshi, what we'll do is we'll just look at the pullers and draggers on the Nifty,
Yeah.
the stocks that were responsible for the Nifty slipping to these levels. Infosys, 2% cut coming in here, 32 points contributing to Nifty's fall. HDFC Bank is contributing 20 points to Nifty's fall. L&T and TCS 18 and 12 points respectively. NTPC 11 points. This is something I'd like to mention, Sakshi. There has been selling on the Nasdaq yesterday night ahead of Nvidia's earnings. The market will be reacting to those earnings today on Wall Street. Should they come out fairly well within or ahead of market expectations, then you will see a rebound in the Nasdaq, and therefore probably the fall that you see in IT today was a precursor of what's most likely to happen on the Nasdaq. But should that reverse, then tomorrow we'll see the IT index outperforming. SBI is the big boy, contributing 10 points to Nifty's rise. The others are just one point away. So nothing much in terms of volumes either, Sakshi. The second most active traded counter after HDFC Bank is ABB, 2,153 crores. Nothing much in volume, like I said. In terms of fall, people just wait for the sideways move to come in, lest the volatility in option prices cuts them out on shorts. Sakshi.
Okay, winding down the markets then for you, the Nifty is shutting shop around 22,024. That's a cut of 0.8% odd. Similar cut for the Sensex. You're looking at the mid-cap index that's dropped 1.3%. The Nifty mid-cap 100 index. It's the IT names that have fallen definitely 1.8% lower. And this is the second day of a cut coming in for the IT names again. The Nifty Bank down by 0.3%. That's still been on a slightly better note than the benchmark indices, falling just about 0.3% odd. The stocks that have dropped in trade today on the Nifty: BPCL, Coal India, Power Grid, Hero Moto, NTPC, Wipro, Infosys. Of course, in terms of the majority contribution, it's Infosys that's led the downfall. Tech M, HDFC Life, L&T, HCL Technologies. These are the other stocks that were among the top movers on the downside for the Nifty as of now. With that, we wrap up this very special trade. Many thanks, Shail, for being with us on this edition, and we will see you tomorrow morning as well with the market opening to find out whether NVIDIA shares have reflected the earnings and whether that will also come back into IT earnings tomorrow back home in India. Thank you so much for watching, but do stay tuned on to Business Today, Bazaar Now, as we wind down the markets on that one.
Darwin Platform Group of Companies is one of the fastest growing diversified Indian conglomerates with global footprints. It is setting up offices globally and tying up with companies across the globe from multiple sectors. The company has ventured into real estate and construction, stockbroking and finance, arms and ammunition, mining, airlines and many other sectors.